Hello, everyone, and welcome to our webinar today. I'm really glad everybody could join us. Today, we'll begin starting here in just a few minutes. We're going to be letting some other people join in. We're going to be diving into some really cool topics today, so I'm really glad you could join us. So hold on for just 1 second here, and we'll be getting everything going. Okay, so this is actually, for those of us joining us live, this is one of the this is by far the most registered webinar I've ever had. We have several hundred people that are registered for today, and I think it's because these topics are so relevant right now. The reason I wanted to do the show today on credit privacy numbers, shelf corporations, and buying trade lines is because so many people ask me about these, and it hasn't always been that way. In the last 6 months, I've started to get a lot of questions about all three of these things, so I thought it would be great just to do a show on these three things, address your concern, what the FTC, what the bureaus, what everybody has to say about credit privacy numbers, shelf corps, and buying trade lines. Now, if you're actually watching this at a later date on YouTube or listening to it on iTunes, feel free to visit our website, creditsuite.com. That's creditsuite, SUITE.com. You can opt in for a really cool business credit ebook there and get on our list for our live actual shows. For those of you that are here, welcome. I'm glad you could join us. Feel free to type anything in the chat. I probably won't. Everybody's saying hi, hello. And I don't actually I won't have a chance probably to answer a lot of questions. I have another webinar scheduled within the hour, actually in about an hour. So I have just about enough time to do this. But I will, I think everybody, Nate, Mr. Zimmerman's here. I know you're an expert on CPN numbers, so welcome to the call. Is there a number we can call in to listen? No, there's not right now. With the way that Webinar Jam works is that you kind of have to be here. It actually is going live on YouTube right now. So it's not like GoToMeeting where there's an actual phone number where you can log in. But if you're able to make it through the event, we'll send you a playback so you can attend. So we're going to jump in and talk a little bit about three things today: credit privacy numbers, shelf corporations, and buying trade lines. Before we go too far, let me introduce myself. My name is Ty Crandall. I'm the CEO of Credit Suite. And at Credit Suite, we help companies obtain a business credit. We help companies offer business credit and financing as a service. We also help companies obtain business financing. So we're really the experts in helping companies build credit for their EIN number, which is why I'm asked so much about CPN numbers. A lot of people even confuse the two and think that CPNs and EIN numbers are the same, which they absolutely are. So if you want any more information about us, there's our contact information, 877-600-2487. You could visit our main website, creditsuite.com, or email us, info@creditsuite.com. And we also got a free guide for you on business credit building if you want to check it out, creditsuite.com/EIN. So I don't want to talk any more about us or me, so let's jump in. Let's talk about the main topic here. Now, we're going to do this in three parts. First, we're going to talk about CPN numbers. Then we're going to talk about shelf corporations, and we're going to wrap up talking about the purchasing of trade lines. So a CPN number, what is a CPN number? Well, a CPN number is a credit privacy number. It's also called a credit profile number. It's also seen as a CPN or an SCN or even a secondary credit number. So all of these things, all of these are names that you'll commonly see a CPN referred to. It's a 9-digit ID that basically can be used as an identifier in cases where you actually need privacy. So like a social security number, a person can only have one CPN number, okay? And it's used really as a unique identifier for, even financial transactions that lets lenders and credit reporting agencies keep an eye on your borrowing history. Now, this is really what it's defined as, what it's actually promoted as. So a CPN number can help you keep your finances safe and kind of hidden from the public eye. Now, for that reason, this is where it's really popular. It's popular among elected officials, congressmen. It's popular among celebrities and people even in witness protection program. It's mostly used by people who need a little extra privacy, okay? That being the definition of a credit privacy number. It's really designed specifically for the purpose of giving you a layer of privacy that your social security number just does not actually provide. Okay, that being said, for example, celebrities use it because the media can use their social to track what they're buying and where they are simply by tracking credit card transactions. Further, an example, Congress holds special privileges to the law, therefore their privacy needs to be protected, which is another big reason and common reason for a CPN. And another example, witnesses under witness protection can be located if they use their true social security number for a transaction. Pretty obvious here, right? That's a problem. If you're in witness protection program, but you're using your original criminal social security number to go out and apply for things, it's pretty easy to hunt you down. So obvious reason for a CPN number. So this is the reason why credit privacy numbers even exist. And this is important to note, okay? A lot of people, you hear these promoted in different ways, but they really exist because they are designed for these special cases where people need this extra layer of privacy that they cannot get without a CPN number. So these are really the specific instances and the rare cases where CPN numbers truly provide the most amount of value. So you're only required by law to disclose your social security number to a few different organizations: the IRS, your employer, when registering a motor vehicle, buying a firearm, or applying and obtaining a federally insured loan such as FHA. Now, why am I telling you this? Because you're going to hear this. When you look into CPN numbers, they say, hey, look, you can use a CPN number here and there and everywhere because all these places aren't required by law that you give them the social security number. And I sometimes hear this. Hey, look, the credit bureaus can't require by law that you give them the social security number. Okay. Oh, and that's actually accurate. There's only a few different places where you have to, by law, provide your social security number. This is actually them: the IRS, your employer, a motor vehicle registration, buying a firearm, or getting a federally insured loan. These are the only times that your social security number is really required by law that it be provided. So you can't use a CPN for many things, including these things: the IRS documents, an employer, registering a vehicle, applying for a government loan. These things require a social security number. You can't give them a CPN number. You can't give them anywhere else. The law says you have to provide a social security number only in these circumstances. So again, stick with me, because what happens is this is kind of the basis of why people say, hey, I can sell you a CPN. Well, the reason is because they'll say, hey, look, nobody can require your social. That's actually accurate. Only these different organizations can really actually require that you provide your social security number. So the theory of why you'd use a CPN goes like this: if you give lenders a different 9-digit number, then they won't be able to find your legitimate credit reports. And if they can't find your legitimate, maybe bad, maybe lousy credit reports, then they're going to approve your applications and start reporting the account information to the credit bureaus using the CPN, thus establishing a new credit report for you that's not connected to your legitimate credit report. This is the theory behind a CPN. This is how you most often see it promoted. You see people offering it, selling it to you, whether it be established, non-established, helping you get it set up. And the whole theory behind it is that, hey, look, you have challenged credit, you have bad credit, so you can get the CPN number and use it in lieu of your social, and then nobody's going to know about that bad credit. That's the theory behind why most people look into CPNs, and most people are interested in actually using them, and the theory of why most companies are selling them. So the supportive argument here is that you're not required to give a lender your social when applying for credit, or the bureaus, right? We just talked about that. There's only certain organizations you have to give the social to. So companies that sell PNs will say, hey, look, CPNs will say, hey, look, you don't have to give your social security number in these circumstances. Only these certain organizations actually require it, which is fundamentally true. You can certainly choose to withhold any identifying info from your lender. They can also choose to deny your application as a result. So what I'm saying is that you're right, that a lender that's not an FHA or government-backed, a bureau can't require that you give them the social. But if you don't give the bureau the social, they're not going to give you your report. If you don't give a lender your social security number, then they're inclined not to give you the loan as a result. So by law, you don't have to give it to them, but by law, they don't have to give you a loan or whatever it is you're applying for either. So keep that in mind. Yeah, it might not be required by these organizations such as lenders, but then again, they don't have to approve you either because you didn't provide it. So what you can't do legally is misrepresent the social. And this is where things start to get into a gray area. This is where a lot of people can get into a lot of trouble with CPN numbers, because you can't misrepresent your social security number. You can choose to withhold it and not provide it in circumstances, but what you cannot do is you cannot turn around and actually misrepresent your social security number. That is what is actually illegal, okay? So that being said, if you choose to withhold your social from a lender and you wanted to not become a criminal, you'd have to go no further than leaving the social security number box empty. Okay, this is what we tell people with building business credit. Hey, if you're building business credit for your EIN, leave your social security number blank. That forces them to pull your EIN number only and then approve you only based on your EIN number. You can leave the social blank. You can do that legally. But if you choose to place a CPN number or any other number that is not your legitimate social in the social security number field on any application, you just committed a federal crime. Point blank, simple, done. It's as easy as that. So now we're starting to unravel this theory of why CPNs would even make sense for anybody to want to have anyways. Because yes, people say, hey, look, you can go out. I was just reading some stuff really before I came into this show, and it said the same thing. I'm selling CPNs, and hey, you can use it on applications for all these different institutions. No, you actually can't, because those applications aren't asking for a CPN, they're asking for a social. And you can't put a CPN or any other number in the social field except for your own social security number. In fact, according to the FTC, lying on a credit application and misrepresenting your social are both federal crimes. So what happens per the FTC is if you enter a CPN or any other number in the field on that application other than your legitimate social, then you just committed two individual federal crimes. Lying on a credit app is the first. Misrepresenting your social is the second. Both of them are highly, highly illegal. Okay, so you cannot use a CPN in place of your social. It's fraud. It's that simple. There's no other simpler way to put that. So when you're going out and if you're trying to look for a CPN and somebody says, hey, you can buy my CPN and then you could use it on all these applications for loans and credit cards and all these things. Well, do those applications ask for a CPN or an SSN? Well, they ask for an SSN. Well, you can't put anything in place of that SSN other than your literal social security number. If you do, you've committed two federal crimes, and that leads to a lot of trouble. And you can face being charged with identity theft also if the social security number is stolen. And this is where a lot of the fraud comes in. What happens with CPNs is people sell established CPNs that are nothing other than social security numbers that belong to other people. So then you have a whole slew of problems on your hands because then you're committing identity theft as well. So look, anybody can get a CPN for free. You don't need to pay for an actual CPN number, okay? You don't. Anybody can actually get one for free. So that being said, don't be fooled by anyone selling you a CPN, especially if they tell you it's already established. That's a big problem. That's a massive red flag if they're telling you it's established. Because in almost all of those cases, the CPN they're selling you really, or the number they're selling you is really a social security number that belongs to somebody else, usually somebody deceased or an actual child. So you've got to be careful, because when you do this, then this is when you get into true identity theft. So anyone who's talking to you about getting a new identity or something already established that doesn't exist, you have to have a red flag, because your own CPN number doesn't come established. So any number you were to purchase that is established, almost guaranteed is a social belonging to another person. So what you should look for so you don't get in trouble. Well, if the company tells you it's perfectly legal to apply for credit using a CPN in place of a social, then you've got to look out for them. You've got to be careful if they tell you to use an EIN when applying for personal credit. You've got to be careful if they're telling you the company demands that you pay for a CPN number, because anybody can get it for free. The company promised you that you'll no longer be associated with your old credit accounts. You have to be leery in all of these circumstances, because these things are either completely untrue, fraud if you went through with them, or borderline untrue as well. Okay, so from the and just so you know, this doesn't come from me. What I'm going to do is tell you exactly what the bureaus and the government thinks about this. So from consumer FTC.Gov, companies promising a new credit identity say they can help you hide bad credit history for bankruptcy for a fee. If you pay them, these companies will provide you with a 9-digit number that looks like a social number. They call it a CPN or a credit privacy number. The credit company may tell you to apply for credit using the CPN rather than your own social, and they may lie and tell you that the process is legal, but it's a scam. These companies may be selling stolen social security numbers, often those taken from children, by using a stolen number as your own. The con artists will have involved you in identity theft. If you follow this company's advice and commit fraud, you may find yourself in legal trouble. It's a federal crime to lie on a credit report or loan application, misrepresent your social security number. Again, here you go. So exactly those two things are illegal. You cannot do them. The bottom line is that if you use the number they sell you, you could face fines or time in prison. This is an exact quote from consumer FTC.Gov. From TransUnion, according to Cliff O'Neill, TransUnion spokesperson, TransUnion does not use these so-called CPNs. We accept and report SSN as an identifier. TransUnion has checks and balances in its systems if someone attempts to use these numbers in place of their issued SSN. For example, we provide alerts designed to help creditors discover if the number provided in the SSN field on a credit application is not a valid SSN or an actual SSN of another consumer. This is a quote, word for word, from TransUnion. Now let's look deeper. From Equifax. According to Equifax, Equifax does not issue or recognize CPNs as an acceptable form of personal identifiable information. From Experian. Experian does not issue such a number CPN and does not recognize them as valid. If a person uses a number other than their own social security number, they may be at risk of committing fraud, especially if that number is valid social security number belonging to another individual. From the Social Security Administration. During a 2011 Social Security Administration hearing, Robert Felt, special agent in charge of the Social Security Administration, an inspector of the general and administration office of the inspector general's Dallas field division said, and this is a quote, numerous unscrupulous agencies and organizations are providing CPNs, also known as credit profile numbers and credit protection numbers, for a fee as a method of creating a new separate credit profile for individuals with low credit scores, bankruptcy, and slow or late payments on their current credit report. Websites offering CPNs advertise a new credit file with the use of a CPN at costs ranging from $40 to as much as $3,500. Despite what many of these credit repair websites imply, consumers should know that CPNs are not legal. Okay, so again, this is from the FTC. The Federal Trade Commission's also weighed in on the subject. Companies promising a new credit identity say they can help you hide bad credit history or bankruptcy for a fee. If you pay them, these companies will provide you with a 9-digit number that looks like a social. They may call it a CPN, credit profile privacy number. Also, the scammers purporting to be selling CPNs or selling stolen social security numbers instead. The FTC warns scammers often use social security numbers stolen from children for these purposes, and you could actually unwittingly be committing identity theft if you apply for credit using a stolen social security number. Okay. More from the FTC. Promoting false identification numbers to create a new credit identity is illegal. Here's an actual link. Now this link, and let me see if I can actually open this link from a slide. It looks like I can. It's just opening it in a different window here. So let's go and do that. So here is a lawsuit in this case. And just so you know, these aren't recent. This lawsuit goes back to 1999. Okay, and you can actually get this if you're looking at the domain, and you can see this hopefully from where you are. This is FTC.Gov's website. So this is the Federal Trade Commission. 16 defendants targeted in a law enforcement crackdown at illegal credit repair services have agreed to settle federal charges that the file segregation advice and products violated federal law. The charges were brought by the FTC of the United States Department of Justice at the FTC's request. The settlements will provide consumers redress for victims of the scam, bar future violations of the CROA, and bar deceptive claims about file segregation, including claims that it is legal, and require that the defendants notify their victims that using a false identification number to apply for credit is a felony. Okay, the defendants use the internet and other media to claim they can help consumers obtain new credit histories by obtaining a new identification number through a practice known as file segregation. The firm sold instructions about how consumers could substitute federally issued 9-digit EIN numbers or taxpayer ID numbers or social security numbers and use them illegally to build new credit profiles that would allow them to get credit that they may be denied based on their real credit histories. Many of their ads claim the practice was legal. And it goes on and on. It talks about what actually happened to them as a result of this. But this is an actual lawsuit against the companies that are actually coming in here and saying that this is legitimate. So let's summarize it. Yeah, sure. CPN numbers do exist, and they are actually legal to obtain. You can actually have a CPN just as you can a social. but they're intents for specific situations that warrant extreme privacy. CPNs cannot legally be used in place of a social security number for any purpose, including the application of credit of any kind. In doing so, you are lying on a credit application and misrepresenting your social, both of which are federal crimes. So those are the facts about CPNs. And as you saw, half the slides here aren't my thoughts. These actually come from the institutions that govern the laws in this country. The FTC, the bureaus even themselves chime in, so you see how this is actually viewed across the board. So next, let's move in and talk a little bit about shelf corporations. And again, if I get done in enough time here, I'm going to open this up because I know lots going on in the chat just to see if there's any other questions that I can maybe get to. So shelf corporations. A shelf corp is a paper or shell corp that's administered, formed, and then put on a shelf for several years to age. So the term shelf or aged refers to the fact that a company has already been filed and is sitting on a shelf waiting to actually be purchased. So also called aged corporations, seasoned shelf corporations, or off-the-shelf company, or shelf corps. Not the same as shell corps. Shell corps are completely different entities, both in scope and in formation, and they usually have no significant assets or operational structure. A shelf corp is a company that was created years ago for the sole purpose of being sold in the future simply for the value of its age. So what happens is a person forms a company and does nothing with this company other than file the annual reports and cover the annual fees. And then once the corporation's a few years old, it kind of has a value for the right person, and companies will then sell these established shelf corporations. So historically, shelf corps were considered a legitimate way to streamline a startup. They were especially useful prior to the introduction of electronic registration, when setting up new corporations used to take months and months to actually do. Selling them as vehicles to kind of get around credit guidelines is something that's, well, for the most part, fairly new. This isn't really what shelf corps were originally designed for, but nowadays they're kind of promoted as a way of expediting the time it takes you to build credit, especially business credit. So a shelf corp doesn't engage in any actual real business. Most shelf corps have been totally inactive since they were formed years before. They've never had income, they've never had assets, bank accounts, they've never had operations or activity of really any kind. So shelf corps are legal, and they do sometimes have legitimate purposes. Okay, in theory, they can be used by someone who may not otherwise qualify for a bank loan, line of credit, or government contract because they or their existing company do not have the required credit scores or a 2 to 5 year established business history. Again, this is the theory. Why would you want a shelf corporation? Well, the theory is hey, if you get an established corporation, then all of a sudden lenders and credit issuers are going to want to throw money at you because they see that you've been in business 2, 3, 4, 5 years, other than the fact that your business just started. So this is the theory behind them is, hey, if you have some age to your company, well, then it makes it easier to get loans. Other people, for example, some contractors have to be in business for a certain amount of years to apply for certain government contracts. So there are circumstances where people might warrant these as having some kind of legitimate use or value. So for example, a long-established company might qualify for more credit and funding. A company that's been open, for example, for 10 years will look more credible than one just opened this year. Well, that is fairly accurate because, again, companies that are established longer have a lesser chance of failure than companies that are newer. So this might help to secure more credit and funding, as the majority of businesses fail within 4 years, and only a small percent of businesses make it for 10 years. So on the surface, if you only looked at company age, then sure, of course, anybody would rather lend money to a company that's more established than one that's less established. To gain the opportunity to bid on contracts is another one that I mentioned, that it might be an actual valid use where someone might want to use a shelf corp. Some jurisdictions require that a company be in business for a certain length of time to actually have this ability, to actually be able to come in here and basically get a contract. So in that case, a shelf corp might make sense. Now, often people purchase these companies from Nevada, Wyoming, California, as well as Delaware, just because of regulatory considerations and because it's cheaper to start companies in some of these kind of states. So when you buy a shelf corp, you get articles of incorporation, you get action of sole incorporator document, which transfers the company to you, you get minutes of meetings, you get a corporate kit, stock certificates, and a little bit more, a corporate seal, corporate bylaws, registered agent service, and a federal tax ID number. So all these things, if you were to purchase a short shelf corporation, all of these things are what you would typically get with that actual purchase. So we've talked a little bit about what they are, why people might use them. We've even talked about where you could buy them. We've talked about what comes with the shelf corp. So now let's talk about some things that you might not take into account and why you might want to consider that shelf corps aren't for you. Maybe you will, but here's some negatives to take into consideration. Shelf corps are not looked upon favorably by regulators, lenders, or the business reporting agencies. Now, the same as CPN numbers. We just saw this, right? We saw quotes from TransUnion, Experian, and Equifax on CPN numbers. We saw the Federal Trade Commission, the Social Security Administration, all weigh in on how CPNs are bad. You need to stay away from them. In my experience, and I've got about 16 years of financial experience, in my experience, whenever you're dealing with anything that the government and the reporting agency says stay away from, you're probably better to stay away from them because they're trying to do everything in their power to make sure you stay away from them. So it really creates an uphill battle for you to try to take that path. And shelf corps are not looked at favorably by lenders, regulators, or business reporting agencies. So many say they are unethical, borderline illegal, and some even will call them fraud. So from Dun & Bradstreet, it's unclear whether it's legal to use shelf corps to access credit. It is clear, however, that it is deceitful, unethical maneuver that serious entrepreneurs should avoid. Guys, that's a strong quote from Dun & Bradstreet. Dun & Bradstreet is the biggest reporting agency in the business space, and they're flat out saying it is deceitful, unethical, and something serious entrepreneurs should avoid. That's extremely strong language from the top business reporting agency telling you shelf corps probably not something you'd want to consider. If the credit bureaus learn about the company being under new management, then they're often going to list this on their reports, effectively re-aging the company. So what happens is you buy a shelf corp and you change as the new owner of the shelf corp. Well, what happens in those cases is in a lot of cases, companies like Dun & Bradstreet will automatically change the ownership on the company, re-aging it anyways. So you spent thousands for a shelf corp and then lost the benefits of the shelf corp because the bureaus actually re-aged you, which is a negative to consider. Okay, shell and shelf corporations can be created domestically or in a foreign country. Shell and shelf corps are often formed by individuals and businesses that conduct legitimate transactions. However, they can be and have been used as vehicles for common financial crime schemes such as money laundering, fraudulent loans, and fraudulent purchasing. By virtue of these ease of formation and the absence of ownership disclosure requirements, shell and shelf corps are an attractive vehicle for those seeking to conduct illicit activity. Okay, and this is an FDIC special alert. Again, all the way back to 2009. So you've already got the bureaus chiming in. You've already got some of the government agencies chiming in saying, look, you need to be aware of short shelf corps. So is the practice illegal? Well, our conclusion was it is clearly unethical and possibly illegal. I understand that small business owners are strapped for cash and unable to get loans, but they should stay away from these things. If you can't get a loan from a bank, you need to look at other options and maybe even close your doors. It's a bad time, but if you can't secure capital with what your company has in assets, liabilities, and cash flow, you shouldn't try to fool a financial institution. And that is really what it is. I mean, let's not sugarcoat it. You're buying a shelf corp because you're attempting to fool the actual institution. You're attempting to basically fool somebody into the fact that you've been open for years and years and years when you typically have not been. So many lenders now look at the bank account start date as a corporation start date anyways. So what happens is, and I always think it's hilarious that people try to fool the banks because they're worth billions and billions of dollars, and you're not going to do it. They have all kinds of safeguards. So their newest safeguard is that when you're applying for business loans, they often look at your bank account start date as when your company started. They're not even looking at your corporation docs now anyways. They're matching it up with your actual bank account to see when your company really started doing business. And this makes sense because a legitimate business, when they really want to start transacting, they have a bank account for their transactions to go through. So most shelf corps don't come with established bank accounts though. Some shelf corps have actual credit problems, making it harder to get funding, not easier. And this is the thing to keep in mind. When you buy a shelf corp, you're liable for that company you're taking over. So if that company has bad credit established already and you didn't know it, well, then now you're responsible for that bad credit. They might even have a bad credit profile that you don't know about. So that's something to consider, as well as you're not going to really effectively fool lenders. What's going to happen is lenders are going to look at your corporation startup date. They're going to look at your bank account. If they see your bank account was open 3 years after your corporation was formed, it's an immediate red flag. Then they dive in deeper and realize there was a change of ownership recent, and they know instantaneously it was a shelf corp. It's pretty obvious. And that's as simple of a check as they have to do. Corporation was started this day, this year. Then the bank account was open. What? Why was the bank account open years later? Well, let's look and see what happened with ownership interest on the corporation. Here's an ownership change. This is a clear shelf corporation. And they know right away that it's a shelf corp, on top of the fact that you face the risk of getting a corporation that already has negatively established credit. So negatives of shelf corps. Most lenders know what to look for to see if the corporation is a shelf corporation, as we just talked about. Things like your business bank rating could tip them off. Your bank rating has to do with what your average balance in your bank account is over the last 90 days. So again, if they see that you have a low bank rating because you had no money in the bank account because you just established it, that again would tip them off. Public records also show the change in ownership, which raises red flags, as we just talked about. Plus, shelf corps are expensive, okay? And often they're $500 to $6 grand. Some companies I've even seen charge 20 grand or more. And basically the difference in cost depends on how long that company has actually been open for. So if you purchase a corporation, another thing to keep in mind is you're now the owner and responsible for anything bad that may have happened at that company since the day it was incorporated. This includes back taxes, financial audits, lawsuits, judgments. You're liable. You bought the company. You get everything that comes with the company that you actually bought. So can you imagine that? You spend $3,000 for a shelf corp only to realize that not only does it have credit problems, but then it's got back taxes that now you're personally liable for. Look, this is a legitimate risk you face if you're buying a corporation that you don't really know anything about. So again, all these things are things to consider if you're even thinking about buying an actual shelf corporation. Now, they really aren't needed in business credit building anyways, and this is why people build shelf corps. Remember back to what we talked about in the beginning. Why do people buy shelf corps? Well, because the theory is that if you're open longer, then people will give you money. Well, I can tell you that when it comes to business lending, they're not going to give you money based on age. They're going to want to look at your business credit. They're going to want to look at your financials, whatever it may be that you're applying for. If you're applying for a cash advance, they're going to look at your bank statements. If you're applying for an SBA loan, they're going to look at your tax returns. And if you're building business credit, you absolutely do not need a shelf corporation to do it. Okay, any company can build business credit without needing a shelf corporation. As a matter of fact, most sources out there will approve you even if you're a brand new startup vendor, or a startup company. So most vendors will approve new businesses for credit even if you just open your doors. So the whole theory is hey, you need a shelf corp. You got to get a company that's been open for years, so then you can turn around and get established credit, or you can get new credit faster. Well, you don't need to do that. The reality is you can use sources like Uline and Quill to go out and get initial vendor credit. They report to the business credit reporting agencies. Then your company, even as a startup, has trade lines, has a credit profile, has a credit score established. And with all of those things established, you can then start getting store credit and even cash credit. Home Depot, Lowe's, Amazon, Best Buy, Walmart, they all offer business credit that's not linked to your social security number. And all you have to do to get approved is get some of these vendor accounts first. They report to the business credit reporting agencies. Then you use the established credit you have to start getting store credit and cash credit. And very few sources will ever stop you from getting credit because of time in business anyways. So Home Depot, for example, typically won't approve you unless you've got a lot of money in revenue or 3 years time in business or a lot of trade lines. But if you went and got credit at Best Buy and Walmart and all these other places that will give you business credit, and you established a lot of credit, even Home Depot would approve you without the time and business requirement. So you don't need shelf corps to build business credit, no matter what anybody tells you. The key is to know which vendors can help you build brand new business and who won't. So by this, I mean, there are only some vendors out there that will approve you for brand new credit if you're a startup. Like I said, I mentioned two, Uline and Quill. They'll give you credit even as a startup. You can't go into Staples to get initial credit, but if you started with Uline, Quill, got credit profile, got a credit score, and then started to go to stores, you will get approved. So you don't need shelf corporations to do this. And, you know, I was approached by somebody, well, and I'll talk about that in a little bit later as we get into trade lines. So shelf corporations are not necessary to build business credit. The bottom line, the only reason you're going to really want to buy a shelf corp is to make it easier to get loans and to make it easier to get business credit. Well, when it comes to business loans, very little has to do with your time in business. Most of it has to do with tax returns and revenue and bank statements and everything else. So you're not going to fool a lender. They get too much information from you to know that you bought a shelf corp. When it comes to business credit building, you don't need a shelf corp. You could build business credit even if you just open your doors today. That's what's beautiful about business credit. You're not going to get approved for a ton more credit because you have a shelf corporation. As a matter of fact, it can cause you problems. It can get you red flagged. It can get you re-aged. It can create more problems than it's worth. And it's absolutely not a necessity because even a startup can build business credit. Using a shelf corp is not the best way to build business credit by any means for that reason. And due to their expense and potential issues, a lot of which we talked about, all the liability you take on just by buying that company, they can actually hurt you more than they can help. And that's what you got to think about. When I get into something like this, I think, what is the end goal in mind? So you're going to buy a shelf corp. Why? What are you trying to accomplish? Well, typically you're trying to make it easier for you to get money and credit. Well, think about it. Do you really think because you bought a 3-year aged corporation that lenders are going to throw money at you? More than likely, probably not. And especially based on everything we talk about here, you take on a lot of liability as an attempt to even try to do so. So something you probably definitely want to stay away from. So buying business trade lines, what you should know. So business trade lines are lines of credit basically extended to businesses by their vendors, by which the business receives goods or services for which it agrees to pay at a later date. This is vendor credit. Actually, all credit as we know of started from vendor credit. You know, business credit, vendor credit was around decades before consumer credit even existed. So when we talk about what is a trade line, well, it's basically credit extended to that business by their vendors, by which the business receives goods or services for which it agrees to pay. So you go out, you get a credit line with Uline, and Uline says, okay, you can now buy our products and services using the credit line, and then you pay them back, and then they report that to the credit reporting agencies as a trade line. So trade lines are often established between a business and a vendor as opposed to a line of credit offered by a bank. So trade lines are often referred to as more vendors or stores than actually bank credit. Now, using trade lines can help businesses build credit since the loans are frequent and the turnaround is quick. Trade lines are a great way to build credit because the problem is banks by default deal with conservative risk. So by that, I mean, banks, you have to have established credit. You have to be in a better position financially to get approved for bank credit cards, bank loans, etc. Trade lines from a place like Uline or Quill or vendor credit and other store credit that will give you trade lines, that's easier to obtain and faster to get approved for than you're ever going to find with an actual bank. They can also help you rapidly build positive credit experiences. Okay, this is what's great about business credit. When you get approved for legitimate business credit accounts, you could use these vendors to build your business credit profile and score very, very fast. So there are many companies online promising to sell you trade lines, season trade lines. Sounds like a good idea. So instead of you actually going to Uline, applying for credit, getting credit, using it, and getting a trade line put on your credit report, there's companies out there that are now selling you trade lines. So they're selling you what are called season trade lines, which means these are trade lines that are already there. They already have activity. They already have sometimes years of history. So if your company has poor or little credit, you can, for several hundred or several $1,000s, have your business piggybacked onto the account of someone who has established excellent credit. This is basically what they're selling you. So they're saying, hey, look, here's the deal. And I'll give you an example. I had a guy call me the other day. He actually reached out to me on LinkedIn and said, man, I see what you do. You need to give me a call. I have something that's a game changer for your clients. I said, okay. So I called him up. So what's up? He said, here's the deal. I'm going to sell you seasoned trade lines. How long does your customers go through to build business credit? I said, it's actually pretty fast. They're going to get legitimate credit lines within or get legitimate vendor credit within a week. And then once that reports, and about 30 to 60 days later, they'll then have enough credit to go in and start getting store credit, and cash credit they can usually get in about 4 months. Oh, no. I'm going to cut that time frame drastically, and here's how. I'm going to sell them seasoned trade lines. And then what's going to happen is they're going to put their business on here, and they're going to benefit from all this history. So they could skip the actual steps of building a credit profile and just basically obtain and use somebody else's instead. So this enables the new business owners to appear to have more credit worthiness than they've established for themselves. Now, remember what we talked about earlier. Anytime you're trying to fool a lender, you're already fighting an uphill battle. And that's what seasoned trade lines are. You're basically coming in and you're trying to fool a lender that you have established credit that you don't really have. And that's ultimately what buying business trade lines is. So piggybacking trade lines is a practice involving seasoned trade lines, sometimes called piggybacking, which uses a creditworthy borrower's accounts to improve the credit of an unrelated third party. Okay, the creditworthy borrower adds the third party as an authorized user of his lines of credit, but does not actually provide the third party with actual access to that credit that would permit the third party to make changes to that actual account. I'm trying to look at to see if I don't have who that quote was from, so I don't even know why I have it on here if I don't know who it was from. So then it's probably Wikipedia. So this is what it really is. When you're buying seasoned trade lines, basically what's happening is this. You're going to somebody that has legitimate credit already established. And then you're paying them money to have them added you to that actual credit account. So now your credit report reflects and you're getting history for their already established credit. That's how that basically works. Now, it also works in the consumer world too. You see this sold in the business world. You see this sold in the consumer world. So that being said, the benefit to the third party is an improvement in their credit rating and showing that they have already been approved for other high limit revolving accounts. So in theory, showing you already have credit is supposed to make you more lendable for higher limit accounts. Makes sense, right? So, hey, why build your own credit when you could just pay thousands of dollars to get other people's credit added to your credit report and then use that credit as a springboard to come in and get new credit? That's the theory. So many companies claim to be able to secure $10,000 to $250,000 credit lines once these accounts are reporting. Okay, here is the guy, and this, to finish the story, this is exactly what the guy told me he could do. He said, we're going to add these seasoned trades to your client's credit reports. Then what we're going to do is turn around and get them this $10,000 credit card that I already have secured. Okay, I already have a source. My source will approve anybody that has these trade lines added, and they're going to give them 10 grand right away, and then I can get them like $100,000. Now, I had somebody on a webinar I did a few weeks ago talking about the same thing. He got scammed the same way. He was told he was going to get a $200,000 credit lines once he bought these seasoned trades. And that's the carrot they dangle in front of you. They say, hey, look, here's the deal. We're going to give you seasoned trade lines. You're going to pay for them. And then once these seasoned trade lines are in place, we're going to help you use your established credit to get $100,000 or $250,000 in real credit lines or cash credit. So a company offering the piggybacking service maintains a network of basically creditworthy card holders or vendors. Those stand by the ready to add strangers to their accounts as authorized users for a fee. So these companies that sell trade lines, what happens is they have 5 people that already have trade lines established, for example, and then they basically come in and say, okay, you pay us money, and one of these 5 people is going to add you to their $20,000 Bank of America credit card, and then what will happen is a third party looking to increase their credit score, or looking to increase their credit score, contacts the company. The company offers a selected trade line to the client and charges the client a fee for the actual account. The client pays the fee, usually $500 to $2,000. So you come in, you pay them for this seasoned trade line. Okay, that company then submits the order to the person that actually owns the credit card. Once that trade line reports, so once that person adds you to their credit card, then what happens is that company then pays that credit card holder their fee. Could be $50, could be $250 per account that they're actually adding. And then the company keeps the remaining funds as their revenue. Okay, that's how these seasoned trade lines are sold. This is how seasoned trade lines work. So while seasoned credit is legal, you can do this legally, it can wind up costing business owners more than obtaining their own credit at higher interest rates, according to Experian. And this is very, very, very true, because you don't need to buy trade lines that are seasoned to get to 10, 50, $1,000 credit limit credit cards. You could build business credit legitimately and get there within 4 to 6 months, doing it the right way. So this being said, what I'm going to do is I still have some time here. So I'm actually going to get an answer as many questions as I can. I have about 5 minutes before I've got to jump on and prepare a webinar for here in about 10 minutes. So I'm going to go ahead and answer any questions you have. Hopefully this answered a lot of your questions today. And again, if you want more information, you can feel free to send us an email. If you don't want to type your questions in the chat, or you're watching this on YouTube or listening in iTunes, info@creditsuite.com. That's creditsuite.com. So funny how scare, and I'm getting to questions now. Okay, great webinar. Thanks. Nate, that means a lot coming from you, man, because I know you have a lot of experience with CPNs. Funny how scammers come into a legitimate meeting trying to sell their products. Oh, is that what's been going on in the chat here? Interesting. Well, we'll see how that worked out. Don't have a LinkedIn. Thanks, Rock. I appreciate that. Don't have a LinkedIn, but can set it up. Don't send an email. Okay, so it looks like some people in here are soliciting, hopefully by selling fake stuff, or probably by selling fake stuff. So let's see what's going on here. Sent me LinkedIn. Okay, you guys are talking here. Okay, that's all right. Oh, I'm going to go to the bottom here. That's probably going to be better because I'm working backwards. I need to check a CPN, get trade lines. Hopefully this answered a lot of question. I'm LinkedIn. Send me a message. Okay, valuable Jules. Okay, send me a message. Man, getting a sweet today. Thanks, Mark. I appreciate that, man. The audio is good. Your connection is bad. Okay, you guys are just chatting. I'm just looking for questions, so stick with me as I see if there's any questions in here that anybody has. Okay. I'm not arguing with anybody. It looks like everybody's got, you guys got a lot of discussions going on here in the chat. This is why you attend the live event, because there's all kinds of excitement here. So just all kinds of excitement in the chat, but no real questions here. So I see some different debating and sparring going on, which is great. Sounds good. Okay, I'll provide. So those just kind of hang out with me. I'm just looking to see if there is any questions. Okay, so I don't really see any other questions in here. So if you have any questions that you typed into the chat earlier, go ahead and type them in now, because I want to make sure that I answer them. And I'm seeing a lot of back and forth. And I don't really see any questions. I see a lot of discussions amongst everybody in the room. And for anybody that's seeing Nate Zimmerman type in here in the chat about credit repair, he's a really, really reputable guy and does a really, really good job. So if anybody's looking to have these things done, it looks like you're talking to him about it. I definitely stand by him. I've known him for a long time and spent a lot of time with him. A great webinar. I appreciate that. Okay, provide honest answers to people instead of promoting illegitimate services. Well, Joy, that's what I want to do. I mean, I want you to know the facts. You can make the best decisions, but I think you should at least have the facts behind them. Great job. Thanks. I appreciate it. Is there another link to your website? I know he'll probably get you that, or you could type in his email and he will. Most of these guys will not be able to stand serious scrutiny. Yeah, you're right. They won't. And that's why you should ask them for evidence, because again, if you think about your end results, Salim, and if your end results to, get $100,000 credit line because that's what they offered you, well, then ask them for other people that have, and verify that those people actually exist if they ever get you set up with somebody. And that usually runs them away because they're just not legitimate. What if the corporation's owned by a trust? Can credit underwriters find out who really owns the corporation? Anybody can if they dig deep enough. It just comes down to less, do they have a reason to? And that's what it comes down to. I mean, anybody can dig deep enough to get this information, but it's these red flags I told you about. Like if they see a corporation established, 3 years ago in a bank account last month, well, that's a red flag. That's going to cause them to actually dive in deeper. Building business credit the right way is best. Yes. Doing anything the right way is best. Don't try to shortcut because, the bureaus, the government, a lot of these people you're trying to fool, like lenders, they're worth billions of dollars. They're smarter than and wise to what you're doing, and they're going to know about it anyways. Kenneth, you missed the portion of the CPN. Here's the great news. This is going live on YouTube right now. So what will happen is I'll send you, if you attended here today, we'll send you a replay. If not, it'll be made public within about 24 hours on YouTube. So that'll help you there too. When will you have another webinar this week? Not today. If you're a client, we have another webinar coming up here at 3 o'clock in about 5 minutes. If not, I'll probably be doing another one in a couple weeks. What type of vendors offer trade lines beside Quill and Uline? Valerie, a lot of them. But when it comes to starter trade lines, Uline, Quill, monopolize your marketplace, reliable, office supplies are just some to name a few. Lachlan and Associates is another. What is your thoughts on CPN merging with an EIN? I have no evidence that that can even be done. I've seen a lot of people talk about merging CPNs and EINs. I don't believe it to be possible, and I've actually researched this and found no evidence that that can even be done. Nate just got the thumbs up from Ty. Nate, I hope you weren't having any crazy things going on here. And I don't mean to like shut anybody down that was offering credit repair services. I just saw some post there about Nate, and I think he's a stand-up guy amongst many other people that I work with in the industry. So I own a few tax accounting prep offices and looking to expand into credit repair and business credit. That's great. Shimon, reach out. You can feel free to reach out to us, info@creditsuite.com. I'll get you information on building business credit and starting that. And I can recommend you to some legitimate companies that can help you get started with starting your own credit repair organization as well, and some good Facebook groups. If you ever have put your social security number on an app with your corp, does that make you have to start over? Well, it just depends. I don't know enough details. So Danielle, you might want to email me on that. But you can't, if you put the social security number on an app for your company, you don't have to start over. That just means whatever you are applying for, you added a personal guarantee. That's what the social does. So they pulled your personal credit for the approval and you gave them a personal guarantee. Doesn't mean you need to start over. Just keep in mind that credit you did obtain with a personal guarantee, when you can get probably the same credit without the personal guarantee. If a corporation is open with a trust, I already answered that. To obtain business funding, I offer those, and I have had funding provided to many of our clients. I'm one of those to refresh my knowledge on business funding, but we have a pretty good automated system and credit unions provide funding. I'm not exactly sure. It doesn't seem like a question. I've been silently watching you in action. I don't know if that's dedicated to me. Oh, Phil. I think Phil and Nate. You guys have like multiple stacking conversations going on here. The basic premise is that if you're having to look over your shoulder to see if you're about to get caught doing something wrong, you're doing something wrong. Yeah, Joey, that's a good way to put it. And the problem is that these guys will catch you pretty quick, and it usually creates all kinds of problems. How do I get on the next webinar, Ty? Emmett, go to our main website, creditsuite.com. And that's right here. You can see creditsuite.com. Actually, you can go to creditsuite.com/EIN. And when you opt in, then you'll automatically get emails from us about business credit building and about being on our next webinar. What do you think of personal trade lines? Frank, the same thing applies with personal and business trade lines. You just got to, be careful what you're doing. Authorized user accounts do work well in the consumer credit world, but buying them, you're better off to kind of work within family and people that you actually know versus buying them. But everything I said to you is applicable for both business and credit trade lines on this. Not at all. SSN is built with EIN, obviously, but with the CPN, you're using it as a guarantor. That's actually not the case. You can actually get business credit linked to your EIN that's not linked to your social security number. You don't have to link the two together. And I'm going to have to jump off here because I actually have another webinar starting in about a minute. Can I use small office supply vendors such as pins.com or Pinnacle to get started with trade lines? You can check with them. Emily, I don't know that either one of them report to the business credit reporting agencies. That's what matters. You got to ask them if they report to the business credit reporting agencies. I appreciate the information. Okay. Well, look, I'm going to go ahead and wrap up. I really appreciate everybody attending today. Hopefully I was able to answer some questions here in the last 5 minutes. And hopefully during the presentation, you were able to get a lot of information on trade lines, shelf corporations, and CPN numbers. As always, I hope that you leave here with more information and knowledge than you had coming in. So thanks everybody very much for taking the time to attend. I look forward to seeing you on our next session. Thank you so much.